This is Debt Free in 30, where every week we talk to industry experts about debt, money, and personal finance. Here's your host, Doug Hoyes.
This is episode 119 of Debt Free in 30, and today, for the first time ever, my guest on Debt Free in 30 is a sitting member of Parliament. That's right, my guest is a politician. So before we start, let me give the disclaimer that I've read many times on this show. Debt Free in 30 exists to provide different perspectives on the world of debt. I regularly invite guests who have different opinions than my own, so just because I have a guest on the show does not mean I necessarily agree with everything they say. I'm not a member of any political party. I'm not supporting any particular politician. I don't pay guests to be on the show, and guests can't pay me to be on this show. This is not an advertising show. It's a show designed to inform, and that's what we'll do today. So, with that disclaimer out of the way, let's get started. My guest today is Michael Chong, the Member of Parliament for the riding of Wellington-Halton Hills, which is a riding that looks a bit like a donut, including everything around the city of Guelph, but not the city of Guelph, which is actually where we're sitting recording this today. The riding includes the town of Fergus, which is where Michael Chong was born. Mr. Chong was first elected to Parliament in 2004 and is currently a candidate for the leadership of the Conservative Party of Canada, which will be decided at a convention in May 2017. So why in the world am I having a politician on this podcast? Well, simple answer. Mr. Chong wants to abolish the Canada Mortgage and Housing Corporation. And since the overheated real estate market has been a big topic here in 2016, and will probably be a big topic in 2017, I thought it would be interesting to hear a different perspective on the CMHC. So with that background, Michael Chong, welcome to Debt Free in 30. How are you doing today?
Great to be here.
Well, thanks for being here. So let's talk about the CMHC then. We've addressed it many times on this show before, but can you maybe give us the really quick 30-second overview of what is it? What is the CMHC?
CMHC is a federal crown corporation that issues government-backed mortgage insurance and securitization for Canada's banking system. It is the largest crown corporation in terms of its assets and liabilities, and it's often one of the least known corporations out there.
The largest crown corporation, so in terms of assets. So, and what kind of numbers are we talking about? Billions of dollars, I assume.
We're talking about $514 billion in mortgage guarantees in force as of December 2016.
And the limit that they can insure is $600 billion. So we're getting close to the limit then, I would assume.
Yeah, the amount that they've insured has come down somewhat from previous quarters. But it's at record high levels compared to 5 or 10 years ago.
Do you have any idea why it would have come down in previous quarters? I mean, the real estate market is going nuts in places like, well, Toronto, Vancouver, it's eased off a bit. Any idea why it would have come down, or is it just natural ebbs and flows?
It's come down because the federal government is desperately trying to cool the housing market and has issued direction to CMHC to reduce the amount of guarantees in force. I think they're trying to reduce the risk that the Canadian taxpayers bear with these guarantees in force, and they're also trying to cool the market. So that's why it's come down from its previous highs in the last year. But even taking a step back from its current amount of $514 billion, it's still a record amount in the context of the last 5 to 10 years.
And it sounds like a huge number. So obviously you have some problems with CMHC, but, let me give their side of the story, because this is supposed to be two-sided. I've done research. I've done advanced prep here. I went on their website, and according to their website, CMHC helps Canadians meet their housing needs. Sounds pretty good. As Canada's authority on housing, we contribute to the stability of the housing market and financial system, provide support for Canadians in housing need, and offer objective housing research and advice to Canadian governments, consumers, and the housing industry. Prudent risk management, strong corporate governance, and transparency are cornerstones of our operations. So I don't know what your problem is. These sound like fantastic people. What's your problem with CMHC?
Well, that to me sounds like a lot of corporate gobbledygook.
It brought a tear to my eye. I mean, come on. So,
I mean, quite simply, the problem is this, that we have a problem in Canada with skyrocketing housing prices in many of Canada's larger cities that are putting homeownership out of the reach of middle-class families. We also have a problem where the government of Canada now has $514 billion in potential liabilities on its books, liabilities that are borne by Canadian taxpayers. I think that problem is, those two problems are due to one fact, which is that CMHC has issued mortgage insurance and securitization to the point where it's become unsustainable. In other words, I think the largest factor contributing to skyrocketing housing prices, and there are many factors, but the largest factor is the unsustainable rate of mortgage credit growth in Canada over the last 15 years. And I think that is directly a result of CMHC's mortgage insurance and securitization program. Look, what we've essentially done is we have given the banks profits without any risk. Because this program, the CMHC mortgage insurance program, allows the banks to issue mortgages with no risk to their balance sheet. And so we've essentially privatized profits and socialized risk. In other words, the banks churn out these mortgages risk-free, backed by government mortgage insurance. And they have an incentive to churn out as many as they can to take advantage of that program. That, in turn, has led to unsustainable levels of mortgage credit growth. Some 10 years ago, outstanding residential mortgages stood at around $700 billion. Today, we're double that at $1.4 trillion. That's an annual compounded growth rate in mortgage credit of around 7%. That's not sustainable, even taking into account population growth and inflation.
So the key phrase you said there, we have privatized profits and socialized risks. So if I'm a banker, maybe you and I should start a bank because it sounds like a pretty good gig. We start a bank and I go out and I loan money on mortgages, but I don't have to worry too much because if the mortgage gets into trouble, the taxpayer ultimately is going to say, no problem, here's the money.
That's exactly it.
It's as simple as that.
Simple.
So that sounds like a fantastic business then. So we should all be starting banks then. So I guess if CMHC is a good idea, then we should have the same thing in every other business too then. We should, if you own a hardware store, then the government should guarantee losses if you sell a hammer for too little. I mean, that would be the logical extension of it, wouldn't it?
That's right. And that's why the banking system and the big banks have loved this program so much. It's literally allowed them to issue these mortgages without any risk to their balance sheets. And so out of the $1.4 trillion in outstanding residential mortgage debt in Canada, the government of Canada has guaranteed $520 billion of that with this mortgage insurance and securitization program. And there's been another unintended consequence, which is that the banks have shut down their lending to small to medium-sized businesses in Canada. It's very difficult for SMEs to get access to get loans, to get access to capital. And that's because the government of Canada, through CMHC, has actually given banks an incentive not to loan to small to medium-sized enterprises. And this isn't my conclusion. This is the conclusion of the International Monetary Fund. Some 3 years ago, the IMF's chief of mission in Ottawa issued a very public statement saying that CMHC and the government of Canada should scale back its mortgage insurance business because it's drying up funding and financing for Canada's small to medium-sized enterprises, which in turn is leading to lower levels of business investment. Literally, this program gives a disincentive to banks to loan to small to medium-sized businesses.
Well, which makes perfect sense. If I'm a bank and I've got $1 million sitting here in deposits that I want to lend out, I got a choice. I can lend to Hoyes Michael and Associates, a relatively small business, but they might not pay me back and I'll lose everything. And with interest rates as low as they are, I can't charge them 50% to mitigate the risk. Or I can take that $1 million and put it into mortgages, and I know I can't lose because the government will cover any losses.
That's exactly it.
So it's not that the government is telling them not to lend to small businesses. It's just the obvious conclusion that anyone would make. I can earn a return risk-free here. That's what I'm going to do. And so what you are saying then is, so let's get into the options here. So CMHC is bad. That's what you're saying. I'm putting words in your mouth, but So we got a choice. We can do what you said at the outset that the federal government is doing, which is kind of turn down the taps a little bit. And we've had previous guests on the show, Ben Rabideau, Hilliard Macbeth and a few. And Ben, a couple of episodes ago, said, well, they are doing some things to turn down the tap. They brought in these rules on October 17th. There's some new rules that came into effect on November 30th. They're going to be adjusting the capital requirements next year. So the fire hose is going full blast. We're going to gradually turn it down and, somehow engineer a soft landing. You obviously don't agree with that approach. You think that no, blow the whole thing up. So why is getting rid of CMHC better than gradually trying to slow the plane down before it crashes?
Well, I think we should try to slow the plane down and engineer a soft landing, as they say in the language of the industry. But I'm skeptical that we're going to be able to engineer that soft landing. We have been tinkering around the edges of the mortgage insurance market now for the better part of 6-7 years. Minister Flaherty introduced many, many changes to the program. Bill Morneau, the current finance minister, has introduced several more changes, and they're talking about even more changes in the future. And despite all these changes and all this tinkering around the edges, the price of housing continues to accelerate to unsustainable levels. And mortgage credit growth continues to grow at unsustainable levels. So I don't think tinkering around the edges is a long-term solution. I think the long-term solution is to privatize CMHC's mortgage insurance and securitization business. That is the long-term solution to making housing more affordable.
So let's assume that in May you become the leader of the party, and then, I don't know, whenever the next election is, the boy king gets defeated and you become the prime minister. So do you just on day one say we're shutting the doors to CMHC? Or when you say privatize, to me, privatize means we find some other people to buy it. That's what privatize in my mind means. And if I'm not mistaken, there are two other entities that provide mortgage insurance in Canada today, Genworth and Canada Guarantee. Obviously, they are much smaller than CMHC, I assume. So would one of those two entities be a logical purchaser of CMHC, or do you have some other plan as to how it would actually be privatized?
Well, first off, we wouldn't shut it down on day one. We'd plan an orderly transition to ensure continuity in the marketplace. The second thing we would do is that we would take out all the non-mortgage insurance and securitization assets out of the corporation and back into a federal government department. So CMHC's does have some other things that they do, such as providing affordable housing for low-income families and low-income Canadians. We take those programs, spin them out of CMHC back into a federal government department. What we would then be left with is a Crown corporation with only the assets of the mortgage insurance and securitization business. We would then consult with the Competition Bureau and get their advice as to whether or not this single large Crown corporation with about 80% market share would have an unfair monopoly over the market. And if the advice came back that it would lead to unfair competition, unfair monopoly, we would look at splitting the assets into two and then putting it up on the marketplace for sale to a private company. So it would be an orderly planned transition so that Canadians could continue and banks could continue to get mortgage insurance, just not on the taxpayer's dime and in a way that's sustainable.
So I'm a bankruptcy guy as well as being an accountant, so I understand what the difference between an asset and a liability is. An asset is something you own, a liability is something you owe. Does CMHC actually have assets? Because it sounds to me like what they really have is liabilities. So is there anybody out there who would buy this? I mean, it's an insurance company. So if mortgages go bad, we got to pay out a bunch of money. But if mortgages don't go bad, we don't get anything more because we've already collected the premium. So it seems to me like it's a massive liability, not an asset. Would anyone actually pay anything for it?
Well, they have significant cash on hand.
So all the premiums that they've been paid, not all of them, but they are building up on the left side of the balance sheet and the liabilities are on the right. And so the hope is that the assets are greater than the liabilities. Obviously, we don't know. Tell me when the market's going to crash and we can do the math, right? So,
yeah, they've significantly increased their fund, their contingency fund for bad debt. I think it's been more than doubled in the last number of years because they are starting to realize the risks that's out there. So they do have assets, and the assets are significant. One of the biggest assets is the $520 billion mortgage insurance and securitization portfolio. Yes, there's liabilities associated with that, but there's also assets associated with that. And the market would have to price that in order to determine what the value is.
So what you're talking about is, doing open heart surgery on the patient while they're still awake here, because this is not a simple thing that you're describing. So we want to cool down the housing market because it's overheated, but we also want to sell off this asset. So we want the housing market to be really strong when we sell it off, because then we get the most, bang for the buck. If we let the housing market crash tomorrow, then CMHC's in the hole. No one's going to pay anything for it. So presumably this would be a multi-year process. It would not be, like you say, on day one. If it was Donald Trump, it'd be done on day one, but we're in Canada here. So presumably it would take, 2, 3, 4, 5 years kind of a thing to wind out of it. Is that your thought?
Yeah, I would hope that it would take no more than 2 to 3 years to privatize it. And I would hope it wouldn't, my expectation, it wouldn't take 5 or 6 years to do it.
So the obvious question then is, again, you're the prime minister, you do this, 2 to 3 years, get wound out of it. You just said that CMHC has an 80% market share. So that tells me that of all the insured mortgages out there, CMHC has their fingers in 80% of them. So you take out that from the market, that's got to have some effect on the real estate market.
Well, I'm not proposing to take 80% of the mortgage insurance market I'm not proposing to take 80% of the market out of the 80% of the mortgage insurance out of the market. I'm just proposing to change the ownership of the 80% of the mortgage insurance market.
So the assumption is the consumers would still be able to get mortgage insurance. I guess it's not consumers, It's banks.
That's right.
We're not insuring the average guy. We're insuring the big banks. The banks would still be able to get mortgage insurance. It would just be from either Genworth or Canada Guarantee or whatever gets spun out of CMHC as a private enterprise.
That's right. And the difference would also be that not only would it not be from the government of Canada, the mortgage insurance would be properly priced. And that's a problem, that's a problem we have today, is that risk is not being properly priced in the marketplace. It's being underpriced, in the residential mortgage
And so
market.
what you're saying then is mortgage interest rates would probably be higher. And I realize it's not just the mortgage interest rate when I buy a house. There is an insurance fee built into that.
I'm not saying mortgage interest rates would be higher because that's set by the central bank and by the, bond market. What would be properly priced is the risk associated with the amount of mortgages being issued, their amortizations, the amount of individual mortgages that are being issued. Those are the kinds of things that start to get properly priced. Currently, there's not a proper pricing of risk in that area.
So as a consumer, it's 5 years in the future now. So you've been the prime minister for, 2 years at this point. What do I notice that's different? Do I notice anything different? I mean, there's some huge changes on the bank side, obviously, because they're now dealing with CMHC private co instead of government co. But does the consumer notice anything different?
Yeah, I think the consumer would start to notice several things. First, they would start to notice that housing is not accelerating at unsustainable levels. So in other words, housing prices would start to moderate, and as inflation catches up, housing prices would become more in reach of middle-class families. The second thing people would start to notice is that there isn't a one-size-fits-all solution that's being imposed on the entire country for the mortgage insurance market, because the private sector, I think, would be much more flexible in the way it deals with risk than the current federal government's approach, which is to say, here's our change to the mortgage insurance of CMHC, and this is going to apply across the country, even though it is being brought in because of the problems we're having in the Toronto and Vancouver market. So I think there'd be greater flexibility with mortgage insurance that would allow consumers more choice, and would also allow people who are in markets where the housing market isn't so heated to more easily access mortgage insurance.
So you're saying CMHC is the, Henry Ford Model T approach. You can buy any color of car in the rainbow so long as it's black. There's one color, that's it. And you're saying if it was privatized, there would be many more flexible options, presumably. Would you also assume then that small businesses would have access to better funding? Because now the banks are going, well, the mortgage market isn't quite so lucrative, so let's start throwing some money at some other places.
That's exactly it. And it would free up billions of dollars in capital for small to medium-sized businesses, because banks would start focusing on lending to SMEs because the risk then becomes more reasonable.
So you think the real estate market would moderate but would not crash?
Well, that would be, I don't know. I mean, that's up to the marketplace. That's not for me to, pronounce upon. But I think that it's clear that countries where government-backed mortgage insurance is in place have a tendency to have asset bubbles and the corresponding crash. That's not my conclusion. That's the conclusion of the IMF. The IMF has done a lot of work on this, and they've concluded that housing markets where government intervenes in the marketplace through mortgage insurance have a tendency to create these housing bubbles and the associated crashes. And in the long run, this leads to lower levels of home ownership. The United States today has the lowest levels of home ownership in 48 years. Just before the crash in 2008, they had the highest levels of home ownership in decades. And so that is not a good thing for the market, to have these huge appreciations in prices and a corresponding correction. What you want is a marketplace where you have sustainable long-term rates of credit growth that allow for a stable housing market. Government intervention in the marketplace does exactly the opposite, and that's the conclusion of the IMF.
So your basic point is, let's get the government out of it. Let's let the market decide. So final question for you then. In addition to what you've recommended about CMHC, you've also got some ideas on OSFI. So first of all, what is OSFI? And number two, what in broad layman's terms, what do you think needs to be tweaked there?
Well, OSFI stands for the Office of the Superintendent of Financial Institutions. It is Canada's federal banking regulator. Its role is to ensure the stability of the banking system and to ensure that banks don't take on too much risk. So if we are going to privatize CMHC's mortgage insurance business, then we also have to strengthen OSFI and its oversight, not just of the banking system, but of the private sector mortgage insurance market, to ensure that we don't have another 2008 financial crisis where banks have taken on inappropriate levels of risk.
Do we care if private lenders take on inappropriate levels of risk?
We do, because our banks are public utilities. And when big banks fail, the entire economy goes into a tailspin and taxpayers end up having to bail out these banks.
And they don't have to.
Well, in practice, they have to.
I mean, we're lucky in Canada because the last time a bank failed was the Depression.
That's correct.
If I'm not mistaken. The U.S., well, they've had a few.
No, we actually had some bank failures more recently, smaller bank failures in recent decades. But the last big wave of bank failures was in the Great Depression.
Yeah,
right?
and they wouldn't have been the big Schedule A banks, obviously, perhaps some smaller regional ones. So, okay, so ultimately what you're saying is, let's get the government as far away from it as we can, but still have a regulatory presence.
That's right. So that risk is properly priced. Look, if a large bank fails, it becomes the taxpayer's problem. And we saw that in 2008 with the failure of many large banks around the world. We saw it even here in Canada, where the government of Canada had to step in and provide over $100 billion in federal guarantees at the time to keep our banking system afloat. So when large banks get into trouble, the federal government ends up having to bail them out. And so we want to avoid that situation, and we can avoid it by strengthening OSFI to make sure that it is preventing that kind of undue risk-taking by banks.
Got it. So what this really all stems from is the fact that we've just got too much household debt too. I mean, it's a chicken and an egg thing, I guess, right? But mortgages are a big component of household debt. Mm-hmm. And if we ease back on the mortgage component a bit, that, presumably reduces our overall level of household debt and makes us more stable going forward, I guess.
Yeah. So mortgages make up roughly 2/3 of all household debt. And my view of the chicken and egg is that skyrocketing housing prices are not the cause of high levels of household indebtedness. Rather, the opposite is true. It's that the easy access to mortgage credit, due in large part because the government has privatized profit and socialized risk through mortgage insurance, has created skyrocketing housing prices.
So wet sidewalks don't cause rain. It's the other way around is what you're saying.
That's right.
Excellent. Well, I appreciate that, Michael. That's a good overview and gives us all something to think about. I think here in Canada, CMHC has been around for, 70 years or whatever it's been. So it's not something we even conceive of as not being there. But you're saying that there is an answer. So I appreciate you coming and bringing that to us. Thanks for being here.
Thank you for having me. I know it's a bit of a dry topic, but it's an incredibly important one, probably one of the most important macroeconomic policies of the federal government.
Yeah, and just because it's dry doesn't mean it doesn't impact us. So I think being aware of it is a good thing. Thanks for being here.
Thanks for having me.
Thank you. That was my discussion with Michael Chong. And just a quick correction, he actually wasn't born in Fergus, Ontario. He was born in Windsor, Ontario, and then moved to Fergus at the age of 2. So, Michael Chong is a member of Parliament who believes the government should abolish the CMHC. So, what's my take on the CMHC? Well, I'm not a big believer in government interference. I wasn't alive back on January 1st, 1946, when the Central Mortgage and Housing Corporation was created, over 70 years ago, to help house returning war veterans. In 1979, the name was changed to the Canada Mortgage and Housing Corporation, and today we have a government organization that actively encourages Canadians to buy houses. If you have less than a 20% down payment, the CMHC says to the big banks, go ahead, lend them the money to get a mortgage, and if they can't pay, don't worry, we've got you covered. The CMHC doesn't protect you. If you can't pay and the bank forecloses on your house, the bank gets paid, and then CMHC is coming after you for the shortfall. But of course, the CMHC, being a government entity, is not very efficient. I've actually had clients who had their house foreclosed on 10 years ago, and only now is CMHC finally pursuing them, often by taking their tax refunds, and many years later I end up doing bankruptcies for people who lost their houses many years earlier. Let me repeat that. CMHC doesn't insure you, they insure the bank. Is that really the role of government? The biggest bank in Canada, the Royal Bank, just announced that their fourth quarter profit was $2.54 billion. That's not the profit for a full year. That's their profit for 3 months. I have no problem with banks making money. I can buy shares in the bank if I want to. Many pension funds invest in banks. That's great. But do the taxpayers of Canada really need to help a bank that makes $2.5 billion every 3 months? I mean, I get it. The argument is that without the CMHC, new homeowners would never be able to buy a house. I disagree. In fact, I think it's the opposite. I think the fact that the taxpayers are guaranteeing that a bank can never lose money on a mortgage encourages the banks to lend crazy high amounts, and that drives up real estate prices, and that makes it even more difficult for young Canadians to afford to buy their first home. And as Michael said in the interview, if the banks are lending all that money on mortgages essentially risk-free, they have no incentive to lend any money to small businesses, and that obviously hurts the economy in the long run. So if we agree that CMHC is at least part of the problem, should CMHC be reformed or eliminated? Well, as Ben Rabideau and I discussed back on show number 117, that was 2 shows ago, there are changes that are happening to make it more risky for banks to finance mortgages, so the problem may begin to correct. Perhaps those changes will be enough. But Michael Chong makes a good point. If you completely eliminate CMHC, there is no need to tweak the rules. There would be no rules because the banks would be fully at risk for their own loans, or they would need to use a private insurer, not the taxpayer. Would the abolition of the CMHC cause the real estate market to crash? Well, Michael Chong says no, and I guess I doubt it because every house in Canada was not purchased with CMHC insurance, but it would likely lead to some price reductions. Ultimately, I don't control the government, so I don't worry about what they do. I only worry about what I can control, and so I'll give you the same advice I give my clients. If you really want to buy a house, crunch the numbers, make sure it's the correct decision for you, and then save up as big a down payment as possible. With a big enough down payment, mortgage insurance is irrelevant. That's our show for today. Full show notes, including links to everything we discussed, can be found on our website at hoyes.com. That's HOYES.com. Next week, I've got a totally different show for you. My guest isn't a politician. She's a PhD candidate who has some very interesting ideas, so tune in next week for that podcast. It'll make you think. Until next week, thanks for listening. I'm Doug Hoyes. That was Debt Free in 30.